All right. Good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for June 22nd, 2021. Um, Second day of the soccer camp is always tough for me because, I'm sore from day one, and they beat me up today, day two, so I'm dragging. Well, let's see. So, market health check. We've got a second day of follow through that brings us back to the edge of the river, um, almost all the way through the Dragon. We'll be testing the PSAR tomorrow. The RL30 slope is strong. The RL10 is in the fall, but it made a swing low, has crossed the baby dragon. So tomorrow we would expect to see an RLXD at about 424. And I would take that as evidence of more follow through. So if it can get through the PSAR and the all time high above 426, I mean, what more do you want? That's pretty good. Um, where would I be preserving the downside? I think belly of the dragon. I would be locking in that gain. I don't want to give back much of this nice 2 day recovery. So, for instance, if you had been taking the channeling and overreaction signals, which were abundant, it's hard to argue against enjoying a nice 2 day payoff with a really tight, if you had a tight initial stop and having 2 full days of follow through that gets you right back up into the previous 20 days of resistance up in this area. It's kind of hard to argue with getting paid right there, to be honest. If you are hybrid swing trading, where you're using 30-minute charts or hourly charts, that was a very nice exit to take in there for a beautiful 2 day swing. You'd have been very happy with that. But all signs point to up in the broad market. So let's take a look at what worked. All right, so the S&P was up a comfortable 0.5% today. Uh, NASDAQ Tech was up 0.93 for the big win of the day in our indexes. The Russell was a close third at 0.45, so it was still within firing distance. Treasuries and the Dow were both up about a quarter. That's good. And only emerging markets suffered today at minus 0.46. So this is still a market that is rewarding the U.S. and rewarding the speculative indexes inside the U.S. So that's all pretty good. Let's look at the sectors to the upside. So our first little section here has oil exploration and energy, a second follow-through day at 0.5 and 0.67. Clean energy at 0.7, Brazil at 0.88. S&P Tech at 0.9, discretionary at 0.94, ARC Innovation at 1.25, the FANGs at 1.47 for the best performing sector. So that's just a vote for the status quo uber large caps. Those that have will continue to win in this market. Leading stocks, Virgin Galactic 9.5%, Twitter and Alcoa 2.9 and 2.5 respectively. PayPal and Apple 1.29 and 2.7. John Deere, Bitcoin, and Microsoft all doing well. Microsoft and Apple are continuing to thrive here. That conventional large cap, those are value plays right now, a store of value. Squarespace and PayPal were both, the financial disruptors were all better than the S&P. Tesla was close to the market at 0.46. So let's look at the now. The first underperforming sector group here, materials, lumber, and arc genomics between zero point 0.4 and 0.3 to the upside. More fractional gains here from finance, blended commodities, staples, oil, Japan, moonshots. Getting into the negative territory now with Mexico minus 0.06, lithium batteries minus 0.15, wheat and precious minus 0.43. Blockchain minus 0.74. S&P biotech 0.8. Agriculture and marijuana down 1%. Marijuana and the munchies minus 1. VXX, the VIX down minus 0.5 or minus 5%. So that's going to be another signal for potential follow through once more tomorrow for Wednesday. That's where the signs are pointing. Companies that underperformed, the blended large cap crypto minus 4.5%, Ethereum minus 2%, but had an intraday recovery after yesterday's assassination. Commercial real estate and U.S. Steel down 0.9%, Devon Energy minus 0.2%, Coinbase, Cat, and Cliff all basically scratches. Let's take the boys had some very good trades again. Another follow-through day in the broad indexes. If you're not just studying the heck out of this stuff, I don't know what to say. Really good work from the guys today. So in the DAX, what I like on this one is the learning being done, and even in spite of the trades not taken, this is still 2.5 R, and not getting the easiest trades, if you will. Let's look at the trades that were taken. Here's a harsh winter sell-off into the spring and summer, and SSC. And that's we might have done better on this as it was approaching Z3 on the pinch and starting to reverse. Maybe we can tighten this up to the VWAP and make that a full R. Then the next one, we didn't take the hybrid frog opening or the collapsing dragon. We didn't take the supported spring crossing, or to the downside, supported fall crossing, I should say. Didn't take the collapsing dragon once or twice. There was an SSC and an owl available, a Kata 2 and a Kata 2 available to the upside. That would have paid as much or more than this SSC. And you'll notice that the minimum manageable risk box would have been even smaller. So this would have paid nicely. I want you to look on the MMRB. You can have that even tighter here at the belly of the RL10, and that would increase this from 0.9 to 1.5 with no additional risk. And then two collapsing dragons, SSC and an owl, as you've noted. Good learning points. Kata 2 and Kata 2 and Kata 2, all working. This one is a nice shot at Kata 2, and I love the scratch, but I would love the re-entry even more, which would get you paid somewhere in here. So there was a lot more to exploit on the big move of the day. But even so, even missing this big early move and the second and the two legs of the big early moves, and missing this entire sequence, and missing this continuation pattern, you're still at 2.5 R. That's getting a scholarship to learn. That's getting paid to learn. Your risk management on the trades you did take were outstanding. And you can be tightening up that MMRB, and this 1.5 would become 2. That's a beautiful exit on a 1, 2, 3, and the stop and reverse is tasty. I think this late in the day you might get more, but that's not bad. As long as this doesn't go negative, you're okay. Sorry if I'm yawning into the microphone here. I'm going to sleep the sleep of the dead tonight. Oh, man. All right, so we didn't take the hybrid frog. The SSC is reasonable. The scratch is excellent. This could have been a stop and reverse in the pocket, and this could have been a collapsing dragon, which would get you paid. The SSC and the Kata 2 were both available, correct. Beautiful Kata 2 that you did take. And the second position on the Z3 excursion is outstanding. And a great sniper after the third entry. This third entry is so close to the second one that this makes me feel like you were chasing it because you felt maybe guilty for not getting it sooner. And so you want to get that extra early. I don't mind that as long as you hit that sniper hard. And then the re-entry was excellent. Should you have given it more room to run? I would not. I like the exit and the quick reversal, and that's 1.5 and 1. I'll take that all day for 6.5 hours, especially as you're closing in on lunch. Getting paid ain't bad, and that sort of covers you after this maybe hasty third position. And but look, you got a Z3 breakout happening. A doji at Z3 and then you exited. I like that exit, and I love the re-entry. So I would rather be outside wanting to get in than inside wishing I was out. So that's a really good sequence in there for 2.5 hours in a 7-minute series for a net 6.5 in the morning. Beautiful. Here's you now in the afternoon. And this was a perfect SSC, good sniper, re-entry, and sniper scratch. This was probably you taking a break, but I love the kata and scratch and then the re-entry. Re-entry is the key to sanity on this one. This one was not paying off. You know, it was starting to get sideways and choppy. That's a good save, and that's a great re-entry. Second position after the Z3 breakout. Good sniper, good try, and then this one pays for the loss. So that gives you another 4. So that's 11R on you, Dow. That's a good day at work. Good day at work. 11R of execution is 2 position sizing R. That's your weekly target, is 2 position size Rs a week, and you got those in a day with very carefully placed entries and exits. So well done. If you converted this to a swing trade, where would the stop be? So I don't like doing it on the second day after this is a market that has fully recovered after the harsh sell-off. So there's no swing advantage anymore. It's so close to the previous resistance, which resisted 10 different days in a row of trying to make new highs, and it really couldn't. So this is not one that was high priority to make a swing on. But if you did, what you would, I think, you know, I'm looking at the 2 days over here. If you take your average entry, it's something like probably, I'd start from down here at around 69.50. I mean, I think I would take the low of the day, 68.50. I'd be risking $1 on execution, which means the position sizing risk would be $5. Whereas, you know, when you look at the size of the risk that you're taking, that's nowhere near that. So that's one that those 2 large days of recovery have brought it back into the river. And this is one where I would say, you know what, I'll just wait tomorrow and start it off again. And if it's working for me, I'll get the position back on. Why take the overnight risk after two very large days in your favor? That's my thinking on it. So this was a series in Cliff, and the learning points are excellent. Look at all the churning and chopping you're doing on trades 4, 5, 6. That's trading in the middle of a sideways choppy river. That's just feeding crocodiles. They're just eating your lunch. 7, though, is a Z3 pinch breakout after a sideways quiet channel. That's nice. The sniper exit was legit to lock in a gain, but your re-entry could have been 3 bars earlier, and then that would have made trade 8 nicer. Yeah, the nice exit here, and then a beautiful Z3 pinch breakdown. They're front running here on the PSAR flip, and that's pretty nice work right there. So some definite learning points. This was the cleaner version, and that collapsing dragon. This is so nice because you had like a Kata 2 entry. It made a swing high, came down, but it could not make a higher high. So now this collapsing dragon is beautiful. This second position entry here, I think, could have been taken sooner, but that's really a nice collapsing dragon on the second wave. And then I think maybe a third position below the VWAP was possible, but I don't mind waiting for this next collapsing dragon, and then you crush the exit. That is so good. You know, that's probably 8 to 10 execution R. And then the stop and reverse on the owl, classic and tasty. Second position on the Z3 pinch breakout. I think you could get a third one when it crosses the VWAP, but I don't mind this third one, and then a great scratch. And then you have a classic Kata 2 over here. Nice work all the way through. There's nothing to complain about in here. And then any standard, if you had taken this Kata 2, any standard exit, whether it be the sniper or the manager, protects you against that late afternoon sell-off. So really nice work, Luke. Be forgiving and gentle with yourself. Now here's 4.5R the nice way, a nice SSC. Maybe we could scratch that a little sooner. I would like to see you getting short where this exit hit. You got the PSAR flip. You've got 2 lower highs. You got the RL270 sloping downward. I want you to get short on this first red dot and not down here. At this red dot, you should be at no lose plus dinner for 2. Then this is a very nice exit. I would like to see you stop and reversing here instead of giving back that little taste. Beautiful second entry on Kata 2. Good sniper. So there was a Kata 2 in here a couple times that showed some opportunities. So that's 5R and could have been 10. But that's pretty good work. Let's shift to the daily. All right. Again, for those of you keeping score at home or joining us for the first time, the daily report has some primary and some alternates. So this is the cover page. Then in blue are those primary resources for developing trading plans. Okay, and so each one of these pages is a dashboard that gives you insights into different trade patterns. Okay, so that's this section here. Every one of those is its own, trade patterns and dashboard. And then all of these to the bottom are supplemental reports that give deeper insights into market conditions or sector and stock or ETF conditions that give you a little more framing data, a little deeper, more subtle insights. All right. So let's go to the first dashboard. We are back to bullish normal conditions and back to overbought on almost every dimension, and we're very close even on the 10-day. We're back to 78. So that would have triggered the exits in all of those signals that we had in channeling and overreaction. All of the ones that were that fired on Monday, for Monday, at yesterday's opening. Seems like so long ago. But all those would have closed today by rule. Okay. The minus 30 in Williams percent R, if you're using the NDX, that means when it crosses 70 is your exit. And today it crossed 78, for example. The risk Z is starting to show COTA 2 kinds of tendencies here. If it can continue to make some gains with declining volatility, that's not bad. The risk Z is still showing risk on for the long side swings opportunistically. So we're not allowed to be surprised if it makes a all-time high tomorrow. Today, the only mechanical signal we have is in EPP, Asia less Japan, for the overreaction. That still has upside available. The min pains, Apple, Microsoft, Home Depot, American Express, those are the ones closest to their 10-day highs. That's giving you gains, showing you what had the strength. S&P Tech. The losing positions, look, there's J.P. Morgan and Goldman. There's regional banks in here. AIG Insurance. Some weakness still in the industrials like Caterpillar, Metals and Mining, DuPont. Weakness in Nucor Steel and CAT as well. So some of those industrials are still lagging. Lots of dojis formed today in the Dow Tactical. Lots of dojis. So that's a market that feels full. It feels like it's already, that's why to me the edge for channeling an overreaction is already over because you've got two really powerful moves in a row. And watch Ken H's charts in UDOW on how to exploit those in the leveraged broad ETFs. Lots of auto framers to choose from. And then breakouts to the upside in Apple, that's very good, and Microsoft. We've been hitting that drum all week and continuing to follow through. ETF 30, just 7 dojis. Plenty of channeling and overreactions still to benefit from. That's going to be mostly the globals. Lots of 551Ws, which is a nice continuation trade to the upside. And plenty of auto framers to choose from, to your heart's content. The Qs had the big breakout today, as did S&P Tech, and we've been talking for almost 10 days now about the shift away from energy, finance, and materials back to tech, and that follow through has happened right before our eyes. In the auto framer, still a ton of things to choose from with very good framing data. I will leave that to you to study. I like this cluster in the Dow more so than I do gold and silver. Gold and silver showing tremendous multiples, and maybe if you're a futures trader, you could do more with that. There may be some intraday opportunities on that one, though. So I'd be watching wheat and precious metals to exploit that. I like that materials and agriculture are in the stack. That's good. I like that finance is in the stack. I'd be stalking that one close. Ken H., you may notice that UDOW is also in there as well. Keep working that one hard. There's more gold in that mine. We're just going to shift last to the multi-time frame index. Hey, Visa, Microsoft, and Apple, no change from the winners. Tech and consumer discretionary continuing to lead the way. That's the smart way to play it. Watching for a third day of momentum to the upside. Looking for continuation patterns in those winners like Apple and Microsoft and possibly the energy sector. That's the way to continue to play this one. So keep your risk measured and your powder dry, and we shall see you tomorrow. Thank you for your patience.